If you bought a Gold IRA because you wanted security, because you wanted to hold a piece of financial truth in your hands, I understand. But now, you are approaching retirement, or maybe you are already there, and you are asking yourself the big question, how on earth do I actually cash this thing out? You need to pay attention, because the companies that sold you that gold were very quick to take your money, but they are not going to be the ones holding your hand when it is time to get it out. And if you make one wrong move, the Internal Revenue Service is going to step in and take a massive bite out of your hard-earned wealth. The problem is, cashing out a Gold IRA is absolutely nothing like selling a mutual fund or cashing in a certificate of deposit. With a standard investment, you click a button on your computer, the shares sell, and the cash lands in your checking account 2 days later. Simple, clean, done. But a Gold IRA is a completely different animal. You are dealing with actual, physical, heavy metal that is sitting in an IRS-approved vault hundreds of miles away from your home. You cannot just walk in there with a wheelbarrow and take it. This brings us to the deepest fear I see in almost every single retiree I talk to. You are terrified of the tax man. And you should be. If you have a traditional Gold IRA, every single dollar you pull out is taxed as ordinary income at your current bracket. If you are under the age of 59 and a half and you try to touch it, you are going to hit a wall, a 10% early withdrawal penalty on top of those taxes. But even if you are over 59 and a half, if you have reached the age where you must take your required minimum distributions, which is age 73, you are forced to take money out whether you want to or not. If you fail to take your RMD from a Gold IRA because your assets are locked up in physical metal and you do not have the liquidity, the IRS will penalize you up to 25% of the amount you were supposed to withdraw. Think about that. A quarter of your money, gone, just because you did not understand the mechanics of liquidation. So the question you must ask yourself right now is this: do I want the actual, physical gold shipped to my front door, or do I want the cash equivalent wired to my bank account? Let's break down exactly how you execute both, because you have two very distinct paths. Path number one is what the IRS calls an in-kind distribution. This means you tell your custodian, I do not want you to sell my coins. I want you to ship my physical American Eagles or my gold bars directly to my house. Now, dynamically, what happens here? The custodian coordinates with the secure depository vault. They pack up your actual metal, insure it, and mail it to your home via secure transport. But do not think for 1 second that this is a tax-free loophole. The day that gold leaves the vault and heads to your house, the IRS calculates the spot price, the current market value, of that gold on that exact day. If they ship you $20,000 worth of gold coins, the IRS reports that you just made $20,000 of ordinary income. Come April, you owe income tax on that $20,000, even though you are holding metal and not cash. Where are you going to get the money to pay that tax bill? You have to think about these things. Path number two is a liquid distribution. This is where you tell your custodian to sell the gold on the open market. Now, be very careful here. You cannot just sell it to any neighborhood pawn shop. Your custodian will contact a precious metals dealer to buy back the gold from the vault. Once the dealer buys it, the cash is sent directly to your custodian, who then cuts you a check or wires the money to your personal bank account. Again, this cash is fully taxable as ordinary income if it is a traditional IRA. Here is your actionable takeaway, and I want you to write this down. First, you must contact your Gold IRA custodian, the company that manages the paperwork, not the vault, and request their specific distribution election form. Do not wait until December 31st to do this. Liquidating physical gold can take days or even weeks to process, and if you miss your year-end RMD deadline, you are cooked. Second, check the buyback spread. Gold dealers make money on the difference between what they sell gold for and what they buy it back for. Ask your custodian, what is the exact percentage fee or markdown when I sell this gold back? If you do not ask, you might find out too late that you are losing 3% to 5% of your total value just in transaction costs. Third, look at your overall cash flow. If you have to take an RMD, and you have cash sitting in a different, traditional IRA at a regular brokerage firm, you can satisfy your total RMD requirement by taking the cash out of the stock and bond IRA instead, leaving your gold untouched in its vault. The IRS looks at your total traditional IRA balances to calculate the required amount, meaning you do not necessarily have to force a liquidation of your physical gold if you have liquidity elsewhere. Stand in your truth. Do not let the complexity of a Gold IRA paralyze you into doing nothing. Call your custodian, get the forms, understand the tax hit before it happens, and protect your retirement peace of mind. You can do this.